People call mortgages a black box, and honestly, for most of the industry, that's accurate. You hand over your whole financial life, tax returns, bank statements, pay stubs, and credit history, and then you wait, and nobody tells you what's happening on the other side. I spent 12 years trying to fix that problem. I built software to make mortgages transparent. I wrote a book about it. And eventually I got my license because I realized that the best way to open the black box was just to do it myself. So today I'm going to show you exactly what happens when a first-time buyer comes to work with me. Every step, no jargon, no glossing over the hard parts. Because when you know what to expect, the whole thing gets a lot less scary. I'm Nicole Hamilton, registered mortgage loan officer, founder of Homeowning, and your guide through the black box. Let's go. The first call, what I'm actually figuring out. Step one is a conversation, not an application, not a credit pull, a conversation. When someone comes to me for the first time, I'm not trying to qualify them for a loan. I'm trying to understand what they actually want, and whether what they think they want is actually what will get them to their real goal. Those two things are not always the same. I ask things like, what's your timeline? Are you flexible? Is there a deadline? What does your income look like? Is it steady, salary, freelance, or both? Do we have any debt that we should talk about? Are you buying alone or with someone? And then I ask the question that most lenders never ask. What does your life look like in 5 years? Because the right mortgage for someone who plans to stay for 30 years is completely different than the mortgage for someone who might sell in 5. And it's not always something that people think about. I also make sure I understand their sweet spot for monthly payment and closing cost. This conversation takes less than 20 minutes, and it saves my clients thousands of dollars because we figure out the right strategy before we even touch an application, running the numbers and why I do it differently. After that first call, I run the numbers, but not the way most lenders do it. Most lenders tell you the maximum amount that you qualify for, and then they hand you that number like it's a goal. I don't do that. I use my own tools I built myself to show you not just what you can qualify for, but what does $3,800 a month feel like versus $4,200? What's the real difference over 5 years, over 10? I also run your rent against your mortgage so you can see side by side what you're spending now and what you'd be spending as an owner, and put it in the context of your overall financial goals. For most of my clients, that comparison is the moment everything shifts, because they realize that the gap between renting and owning is smaller than they ever thought, and the cost of waiting is bigger than they ever realized. Once we know your strategy, we go after your pre-approval. Pre-approval is not a mortgage. Let me say that again because this confuses almost everyone. Pre-approval is not a mortgage. What it is a lender saying, based on what we've reviewed, we're willing to lend you up to this amount. What we review to get you there? Your credit report, and I pull this myself first before any lender sees it, so there are no surprises. Your income, documentation, W-2s, tax returns, pay stubs, your assets. Where does that down payment come from, and can you document it? Your debt, student loans, car payments, credit cards. That last one, debt to income ratio, is the number that surprises most first-time homebuyers. It's not just about how much you make, it's about how much of what you make is already spoken for. Here's why pre-approval matters in the New York City market specifically. You cannot make an offer on a co-op or a condo or a house in the city without one, not a serious offer anyway. Usually you can't even see a property without one. Sellers and their agents will not take you seriously without a pre-approval letter. So we get this done before you fall in love with a home. Okay, so you have your pre-approval, and you've probably been working with a realtor. You've made an offer and it's been accepted. Congratulations. Now what? This is the part that nobody explains well. And it's the part where deals fall apart when they fall apart. After your offer is accepted and you have a contract period, typically 30 to 60 days to close in New York, that clock starts immediately. During that time, three things are happening at once. Underwriting, the part that feels like a black hole. Your file goes to underwriting. This is where most people feel like they've disappeared into a black hole. Here's what's actually happening. An underwriter, a real human being, is reviewing every document you submitted and deciding whether the loan meets the lender's guidelines. They will ask you for more documents. I want to prepare you for this right now. It does not mean something's wrong. It does not mean that the loan is in trouble. It means they're doing their job. The ask might be, please explain this $3,000 deposit in your bank account from March, or you need a letter from your employer confirming your start date. When these requests come in, the only thing that matters is how fast you respond. Speed is everything here. My job during underwriting is to stay on top of this, to be the person who's calling, following up, and making sure nothing sits on anyone's desk for longer than it needs to, and communicate with you, your real estate agent, and other important stakeholders so that nothing gets stuck and things move as quickly as possible. Efficiency gets you to the closing table, and delays cost you money, sometimes even the deal itself. Once underwriting clears, you get a clear to close, three of the most satisfying words in this entire process. From there, you get your final numbers, your exact monthly payment, your exact cash to close, everything locked in. You do a final walkthrough of the apartment or home, and then you go to closing. Closing in New York is a room full of people, your attorneys, the seller's attorney, title company, sometimes the seller. You sign a significant amount of paperwork, and then someone hands you the keys. That's the moment after all of it. The financial review, the documents, the waiting, the more documents. You are a homeowner. Because the black box only feels like a black box when nobody's explaining what's happening inside of it. If you're a first-time buyer in New York and this is the first time this process has made sense to you, that's exactly why I make these videos. And if you want to talk through what this process would look like for your specific situation, the link to schedule a call with me is in the description. No pressure, no pitch, just 30 minutes with someone who will tell you exactly where you stand and what your best path looks like. I'm Nicole Hamilton. Subscribe if you want more of this. I make content every week for first-time homebuyers in New York who want real information, not sales pitches. I'll see you in the next one.